Mahindra Lifespace Developers is the next one on the show. It reported a mixed set of Q3 numbers. The Q3 launches surged 51% and volumes gained by 8%. Amit Kumar Sinha, who's the MD and CEO of Mahindra Lifespaces, joins us now to talk about that. Mr. Sinha, thanks a lot for joining in. In FY23 as well as, in FY22, your launches were pretty high. But I want to understand, what is the pipeline looking like? What kind of launches are you looking at in Q4? In Q3, your new launches went up by 50%. Will this growth that you see in FY25 be driven by the new projects or the existing executions?
Thank you, Sonia, for having me. Q4 looking solid. We just launched our Kandivali project, which is called Mahindra Vista. And happy to share that in 3 days we sold more than 800 crore of inventory that we put out. So very solid start to Q4. We hope to build on the momentum that we have seen the past quarters and conclude a very healthy FY20. So just to address your question specifically, the first 9 months we had done 5 launches. 2 were plotted launches and 3 were extension of previous project, new phases of previous projects. And they had limited inventory. But Mahindra Vista was the brand new launch in Kandivali, the healthy price point, great product, great set of sustainability and technology inclusions as part of the product. We expect some of the other big launches to happen in later part of Q4 or Q1, which will help us attain our targets that you just talked about. A very healthy portfolio that's looking like for new launches. And we continue to mine our existing launches, the new phases of existing.
So 0.62 million square feet is the launches that you did in Q3, right? Can you tell us quarter by quarter what is the expectation in terms of numbers? How much will you do in Q4? And in FY25, what are you targeting?
The FY25, we have given a target of 2,500 crore pre-sales. And this is in addition to our IC business. So I'm just talking about the residential business, 2,500. But as we have explained, our desire to grow our business 5 times, we have been designated as a growth gem by Mahindra Group at M&M level. We have improved our aspiration to be 5 times in 5 years, so 8 to 10,000 crore in by FY28. While we have given the short-term target of 2,500 crore, our goal is to start to change the momentum from the next financial year, FY25. So hopefully it'll be an exciting year to look out for. As we brought a lot of changes in the current financial year, the impact is only going to be visible in the next financial year. And quarter 4, I think you can do a simple straight line between what we saw FY23 and what we are hoping to achieve in FY25. And hopefully we will beat that straight line.
Okay, all right. Hi, Amit. Good morning. Good to see you in. Nigel on this side. If you just drive down, you'll see the kind of redevelopment that's taking place here in Mumbai. And you all have got a couple of projects, I think, in Santa Cruz as well as in Malad. As a percentage of total business, how much is redevelopment? And tell us how you see things panning out here.
Yes, great question, Nigel. You're absolutely right. We are seeing a huge amount of momentum on the redevelopment side, society redevelopment side. And given the trust our brand enjoys, we continue to get a large number of inbounds to participate in those projects. But we are careful and thoughtful about the financial side as well as what kind of product we can deliver to redevelopment opportunities. Of our portfolio today, roughly 15% to 20% is, from a GDP perspective, is likely to come from redevelopment. We're going to maintain that healthy balance. As you see, we are focused on just 3 major cities for the time being: Mumbai, Pune, and Bangalore. Pune and Bangalore are where you can do outright land purchases. But in Mumbai, given the land prices, we deploy outright, which is a small percentage, joint development, which is a large one, and society redevelopment. My sense as we look forward, a sense is roughly 50% would be joint development, 20 to 25% would be outright, which will be in the broader MMR area, and 25 to 30% would be society redevelopment.
Okay, so Specifically on the launch in Kandivali, can you tell us how much inventory are you bringing to the market in the first phase? And across whatever other launches that you have planned for this quarter and maybe the first half of next year, what's the cumulative GDV that you're looking at for all of these launches?
Yeah. So Kandivali is a largest project for us. One of the, I would say, the inventory that we brought in is 600 units, so north of 1,000 crore. That's been brought in phase one. The total inventory across phase one, which has been brought in, and phase two, which will bring in a few months from now, would be north of 2,500 crore. So that's the Kandivali project. The pipeline that we have, which is awaiting approval at different stages, including the RERA approvals that are almost about to come through, is a total GDV inventory is roughly 5,000 crore, which is the BD pipeline that we always maintain. There are some additions and subtractions that happen. I'm also excluding the Thane land parcel, which is roughly 8,000 crore GDV, because we have to get additional approvals for that large parcel of land to be ready for a new launch.
Okay, all right. Amit, your shareholders will be very happy with what all you're saying, right? Things are looking up. You're sounding very, very optimistic. But I'm a little bit worried about this entire redevelopment that's taking place. I hope infrastructure and hope everything is enough to support this sort of supply that's going to be coming in there as well. But be that as it may, let's focus on pricing. If demand is so strong, do you think you can push through further price increases and push my dream of a larger house a little further? What's your take out there?
Yeah, no, I think you're absolutely right, Nigel. And it's a longer discussion to think about is the urban infrastructure is going to catch up with the demand that we see in the metropolitan areas. So I absolutely agree with you. And I moved from Gurgaon to Mumbai, so I've seen the constraints and challenges of both the cities, to say the least. But you're right, the price increase, there's a huge amount of demand. Post-COVID, we saw a huge amount of interest in owning a home, upgrading a home, and buying a bigger home. So all those things are very, very favorable. And the counter side is the inflation also has been not kind to all of us. But we see roughly 8 to 10% increase in pricing year on year in FY24 or F23. So it's allowing us to increase our margins to at least cover the escalation that we see on the commodity side, on the wage side. So at least we protect our margins. But the challenge of urban infrastructure will continue. Hopefully, you have the opportunity to see Mahindra Vista and some of the new launches. It will get you closer to your dream home aspiration, and it's designed really well. I'll request all of you to look at that.
Okay, all right, Amit. Been a good chat with you. Thanks so much for stopping by and filling us in with all of those details. Wishing you all the best. And it seems it's good times for the real estate sector, and Mahindra Lifespace Developers is definitely participating in that as well.
Well,